Craig Bolanos goes the extra everything we need him to do. He's the co-founder and wealth advisor at VestGen Wealth Partners. And Craig, our first Fed meeting with a new leader yielded no change, at least on the number, but some changes in how things operate a bit. Craig, welcome back.
Yeah, hey, John, great to be with you and your audience as always. And I got to tell you, I just saw a pretty significant regime change at the Fed. It was the first meeting for our new chair, Kevin Warsh, and the Fed. I think, you know what they did, John? I think they tore up the old playbook. They're going to get a lot quieter, which puts potential interest rate hikes or cuts into question, because I think the Fed is finally done. They've cured their addiction of over-explaining. Their new theory, less communication, is actually going to be more effective.
Okay, why? Because they don't like the idea that everyone's reading tea leaves that may never end up coming to fruition, and you move markets on things that actually never have a realization? Why is it better to keep people a little more in the dark on what they're thinking?
I don't know that it's better. I think it's subjective, but here's what this has me feeling. Gone are the days of what I got from Yellen, from Bernanke. I feel like I'm almost back to the early days of Greenspan. So when you slow down or eliminate a lot of the forward guidance, that's what this is, the forward projections that come from over-explaining, I think the impact is the markets aren't going to as easily lean on what I call the Federal Reserve security blanket. I think that's actually going to increase a little bit of the volatility, and investors are going to have to react more to raw economic data again. That's what it used to be. I think that's what we're going back to, and a big part of this is the Fed chair said again that inflation is a choice, and I think having the Fed not be as explanatory is going to give them better tools to actually shift the market and the inflation narratives.
Yeah, okay, so I kind of see what you're saying here is that when the Fed used to speak a lot more and under the previous few Fed chairs, the market could maybe react in real time to what they say and kind of at least almost like brace themselves a bit, right? React in the moment, and then as the news comes down the pipeline, you don't see as much jarring up and down. Now you might just, we're going to react to the economic data and kind of guess what the Feds might do at the next meeting. What was the last thing you said about inflation was a choice? Can you repeat what Kevin Warsh said and what he meant?
Well, yeah, he was really saying how inflation is a choice. And part of what came out today are these new committees that he wants to go ahead and form. A true return to data dependence. I think the talking point for clients at VestGen Wealth Partners and our listening audience might be prepare for some higher interest rates for a longer period of time. Prepare to remove some of the Federal Reserve crutch. Prepare to not have as big of a large balance sheet, a.k.a. quantitative easing. Now, none of this needs to be a negative, but the idea that I was hoping for one rate cut by the end of the year, that's kind of been dashed. We may have to have one rate hike, believe it or not, prior to the end of the year, depending on how much better oil gets before we see the cuts we all want to basically protect the fragile jobs market in 27.
You're explaining everything well, Craig, but if inflation's a choice, I choose no. I don't get what he means. What? I still don't understand, Craig.
Yeah, the Fed has all of these tools at their disposal. The country has all of these tools at their disposal. And I think what we want to end up seeing here is gone are the days of easy money. I think we're seeing a Fed that's going to be a little bit more quiet, a Fed that's going to be a little bit more humble, a Fed that's going to let markets react to the data without the crutch of the Fed saving the world. That's the security blanket. And I think part of that can lead to better interest rate policies that will better control inflation. Now, no one can control the Strait of Hormuz. I get that. But we are making progress. But we have to understand it's a new regime at the Fed. We might even get rid of some of the dot plots, right? Those projections. It's back more to a guessing game like it was in the 90s. That's my initial takeaway after seeing the first federal testimony here today.
Well, I'm glad you explained that. That makes a little bit more sense to me now. I thought maybe he was taking a shot across the bow at the man who nominated him, because there has been some reporting that inflation would be lower if it weren't for tariff policy and the war in Iran. I'm not making a policy judgment on that. I'm just saying that there has been data that's been crunched that way. That was not what Kevin Warsh was saying. He's not saying
No, I don't think. No. Yeah, John, I didn't mean to talk over you, but yeah, no, he's not taking a shot at the president of the United States. After all, he's the one who helped get him in. And we know that it's a delicate dance between what the White House wants and what the Fed's job is to do. I think what I got to tell you, I'm actually going to give him good grades on today. I think it was time for a regime change. I think we do realize that by consistently over-explaining and over-communicating, it causes markets to get anchored to concepts that just aren't economic reality today, like the 2% inflation target.
Right.
I mean, when was the last time we were at 2? It's just not happening. And I almost welcome shaking things back up. And I love how he said, with inflation being a choice, we, the Fed, have the tools at our disposal to tame inflation. See, that invokes confidence for me that they're going to do the right things. They're not going to worry just about the wealth effect, the price of the Dow. They're going to worry about what everyday men and women in this country care about, which is inflation and prices.
Craig, could you give me 45 seconds on what not having a rate cut means to all of us, and maybe even a rate hike? How does that permeate to average Americans?
Well, I think the disappointing part of that is, well, here, one, to savers, this is your time. You might not have to rush down the street to lock in and renew your CD rate today. You might actually see your money market rate remain stable, if not tick a little bit higher. That's great for savers. For borrowers, hey, wait a second. If we're not getting a rate cut this year, if you're waiting for mortgage rates to drop, this might be as good as it gets for the near future. So I think that's the implication for savers and borrowers. Borrowers, lock in rates today. Savers, you don't have to rush. You probably have a little bit more time, as rates are going to be stable, a.k.a. higher for longer.
Get retired, stayretired.com. Craig, I hope all your clients don't ask you to explain the same thing 3 times in a row like I did, but I appreciate it. We got to where I needed to go. Craig, you're the best. We'll hear you on John's show or on my show soon, okay?
Thanks so much.
VestGen Wealth Partners.